looking to make your money work smarter, work harder. Here's a good news that US Fed has cut rates by 25 basis points, and that typically works better for our fixed income investments in India. And here are 4 or 5 points that I would like to bring it on. The first is on the 17th of September, US Fed cut rates by 25 basis points, and they also indicated possibility of 2 more rate cuts by December of 2025. This they have done after 3 quarters staying or keeping the rates unchanged, and this they have done with keeping the overall macro stability in mind, that the growth has been revised slightly upwards. The PC deflator, which is their inflation measure, that is also being revised slightly upwards, whereas the unemployment has been kept mildly softer than where it is now. The second point is the India fixed income, and India fixed income typically augurs well, or the US Fed or other major development market central banks, whenever they are on the monetary easing path, it has augured well for the emerging markets, and India also, it has always been a very favorable situation. Third is the Government of India. Government of India has done the income tax rate cut in February of 2025. Apart from that, very recently they have taken a big bold step on cutting the GST rates to support the consumption and support the growth. Then comes RBI part. RBI proactively cut rates by 100 basis points in first half of 2025. Apart from the rate cut, RBI induced huge amount of liquidity apart by open market operation bond purchases, and also the CRR cut to the extent of 100 basis points in the calendar year 2025. The CRR cut is yet to be fully implemented and will get fully implemented by December of 2025. And the last point is that both the Government of India and the RBI both have done their bit, and RBI going forward will be seeing and assessing the impact of the previous actions that RBI and government have taken. And we think that RBI will be very mindful and watchful of the evolving macroeconomic situation, and more specifically around the developing trade tariff talks with the United States. But overall, we think that the softer inflation and other policy measures typically may create space for possible monetary easing by the Reserve Bank of India in next 2 quarters. And that's from our side. You stay tuned to our announcement. We'll be back to you very, very soon. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.